Welcome everyone, and thanks for joining us. Today I'm again joined by Hick Chiderchi from Ausbil. Welcome Hick, once again.
Good to be with you again, Bill.
Likewise, and thanks for spending the time to update our clients on the crazy world that is. We certainly didn't expect the Dow to hit an all-time high, let alone the strong recovery that we've seen. That's the Dow Jones we're talking about. So a lot of indices haven't yet recovered from their pre-COVID all-time high, and we're talking share markets here, obviously. What are your comments on this?
Well, I mean, it's actually been, yes, you're right. There are some recoveries have been stronger than others, but actually even today, the ASX 200, the leading 200 shares in Australia, the index for that, really traced to the level that we saw at the beginning of the year. So now the price return on our market, the Australian market, is flat for the year. And actually, since the lows, there's been a nearly 50% recovery. So it's not as headline grabbing as the Dow crossing 30,000. But yeah, the recovery is I guess, becoming more broad-based across global indices. And what we're actually seeing right now is a little bit of a rotation from the winners into some of the sectors and stocks that have underperformed up to date. And that's driven by the anticipation of a better 2021 for global growth with the vaccine coming.
Yeah, there's a lot of promising reports coming out, which obviously investors are seeing as an opportunity. We're still seeing other asset classes which clients remain invested in, such as bonds, fixed interest, cash. Do these remain good portfolio diversifiers for the average investor?
Absolutely. You have to have certainly your average investor should diversify. It's always important to do that. And we saw during the February-March period that those diversifiers help to insulate a portfolio. So yeah, you certainly wouldn't want to be chasing too much equities in a portfolio, especially when some equity indices like the US markets are at all-time highs. I mean, we are positive that 2021 will be a good year for equities given a global recovery in growth, which should translate into better earnings in a low interest rate environment, which is all supportive for equities. But valuation is also important, and markets are at high levels. So yeah, you do need diversification. Yeah.
Well, look, it's almost Christmas. We've only got about 4 weeks to go, I think. So
yes, and I think everyone's saying thank God.
It's been a tough year, but it's been another year of learning, not only for our clients but for us too. Yes, it's important to keep your portfolio diversified, have an active strategy. Invest in quality, but also to be able to walk away from that and turn down the noise, which is words of wisdom that we try and uphold for our clients. Turn down the noise, focus on your own life, and I think now is a good time to be able to say, focus on family, focus on life, celebrate the good things, and don't worry too much.
Yeah, absolutely, Bill, and that's right. Yeah, focus on the things that are important to you and the long term and your family, and most importantly of all, yes.
Absolutely. Well, on that note, I wish you and your family a wonderful break, and thank you for all your feedback and your time spent with us for our clients and ourselves as well. And sincerely thank you, and I hope to speak to you early in the year again, Hick.
No problem, Bill, and absolutely the same to you, your family, and all your clients and their families. And yeah, let's look forward to a more calm 2021, hopefully.
Thank you very much. Bye.
Bye-bye.